Hello out there and good morning, traders. It is June 14th, 2024, and welcome to the Apteros Daily Market Insight. Let's dive into our recap. So, starting out with looking where we were prepping, kind of up into a neutral zone here, heading into the open where we were pulling back into our main line in the sand. Got some minor inflections here from this area, and that was kind of the opportunity that we were looking for with scenario one being a hold of this line in the sand. It doesn't work out, breaks down below it, starts holding below our line in the sand here, gives us a great opportunity to switch to the short side on scenario two there. With some nice excursion to the downside. Doesn't get to target, so our main target being this area here, just doesn't quite get there. So got good, favorable excursion, but doesn't make it to our target area and comes all the way back up through there with no real opportunity to kind of re-engage that particular trade and pushing to the upside here. And then that was pretty much it for the session because this is all information that came in after the close into the overnight session where we came down and pushed into that main line in the sand, kind of completing that target from the earlier push before. So that's where we are with the recap. Not a great day. Kind of two places where opportunity, was there for scenario one, and then scenario two right here, and that was pretty much it from there on. Not much else to do in that session. So kind of a dollar one for us in the DMI world. But let's take a look at what's going on today. So today, not exactly the best scenario in terms of narrative. The best way to describe it is dissonance, right? We have dissonance overall in this market. We have a couple of time frames that are more aligned for the bears overall. So we are slightly more bearish than we are bullish, but this particular bullish zone here is a huge problem for the bearish ideas or the bearish, continuation. We've seen this particular area hold up before, and we've seen this particular idea hold up before. So it is an established bullish idea, which makes it, one of those zones that you have to respect and be aware of and be cognizant for, thus creating the contextual dissonance. Now, in terms of ideas and the way this plays out, the bearish idea, the bearish line in the sand is up here for the bears idea. That particular target is all the way down here, right? So along the way, you have some neutral destinations. You have a main target area here for the bull line in the sand, and then you get down into the overall thesis or contextual trade target here, right? Now, the bullish idea, its line in the sand is here, and its destination or target area is here. So along the way for that idea, you have this neutral reference, then you have this line in the sand that you have to get through, and then you get to the stretch target for the idea up above. So that's the breakdown of where the line in the sands are with their expectations in terms of the full target of the idea playing out today. Now, these are coming from different time frames. So often what we do is we focus on what hurdles do we have along the way in an idea. So for the bullish idea, we have this first hurdle here, we have this hurdle, and then we have this hurdle, right? So the one that is more likely to be an intraday target is probably the bear idea, the bear line in the sand if the bulls play out from here, right? If they push all the way up back into here, that would be a good place to kind of scale out a lot of your position and wait and see if you get the next extension of the idea and then re-engage the idea. Same kind of thing on the downside, right? You would monitor it from the downside through this area, maybe get a scale here at the neutral level, and then you want most of your size into this bullish zone. And then if you got down below, you could re-engage that market or use it as an add, depending on your particular process. Now, this is just a breakdown of the trade ideas here today, giving you something a little different with the DMIs. In terms of scenarios, the dissonance is a problem, right? So the dissonance is a problem. So in here, everything is a lot more scalpy, a lot more short term. But that kind of is scenario one, that we remain in the dissonant zone, right? So we remain in here, we kind of float around a little bit, and we don't really see the dissonance clear up. Scenario two would be a clear up to the upside, so we end up seeing the bears break down. We head out to that overall target. Scenario three would be a breakdown out of the bull zone, so we end up, kind of floundering around here, and it reverses on us, and then we end up getting this opportunity from below, continuing down into here. The big problem with these scenarios, okay, so these are the actual, analysis scenarios here. The big problem with them is their risk reward. So, like we said before, if this is the bullish line in the sand, this is the bullish idea. If you look here, right, here's your risk reward landscape. This is your risk, area. This is where you're starting to put on the idea for it. This is where you're watching it, maybe even a little bit below, depending on how acceptance plays out for you. So pretending like, let's say we were in on this inflection or something like that, right? As you go up in the dissonance area, your risk is pretty good down here to the reward. The problem is, as you get out to here where everything is more clear in scenario two, the risk reward landscape is really poor. It's really not that great, in that you're more than 50% of the way through that risk reward landscape. And the same thing is true of the downside, right? So where things clear up with scenario three, the risk reward landscape just isn't all that great because you're more than 50% of the way through that line in the sand area to its target. So we're in a situation where not only do we have dissonance, but the risk reward landscape on where the ideas are the best, where they kind of open up and create a little bit more confluence, there's just not a lot of risk reward there for them, which makes them less than desirable narratives. So I'm giving you kind of a peek behind the curtain here with what NADRO students balance out whenever they look at a narrative and what they're looking at a context. And one of the biggest considerations is the risk reward landscape and where along that pathway we are in the whole entire contextual picture. So breaking all that down to say today's narrative and context isn't that great. It is dissonant, and the dissonance creates a problem for us in the overall clarity in this market. Now, that doesn't mean that one of these trade ideas, one of these trade ideas is going to work, one of them is going to fail, right? Our job is not about sitting with a crystal ball on our desk and saying, oh, it's going to be this one because of XYZ reasons, right? It's really more or less about just understanding that there is a real lack of clarity in this space, and therefore it's not the best of context. Now, if you have a process or a way to kind of balance that out with an intraday framework, tiebreaker for your intraday information, then I encourage you to use that. But the overall contextual narrative that we're seeing here is one where it's kind of like you really don't want to operate in here because of the clarity not being great, and you really don't want to look at the continuation trades as closely because the risk reward landscape is pretty poor on them. So you're sitting in a spot where, yeah, there's opportunity here today. There's, I guess you can make the argument there's opportunity every day. It's about balancing out when that opportunity is clear and available for your process, right? So technically, from a contextual narrative perspective, for me today, there's not opportunity in the ES market because the clarity where the risk reward is the best isn't available. And then once the clarity does show up in the outer areas in scenarios 2 and 3, the risk reward isn't available. So it's just one of those days where the two elements that I balance out in my trading just aren't lining up for me. And then I would go trade another market or I would do something different in the ES. But in terms of just straightforward contextual scenarios, right? Just looking at the DMI from its base level, we have a clear bearish line in the sand here. We have a clear bullish line in the sand here. These two ideas are opposing to one another in this zone. So scenario one is that the battle kind of plays out there. Scenario two is the break up, out from that bear area. The break down is scenario three. And, something's going to play out today. It's just a matter of understanding and balancing out where that clarity lies for us to execute well and execute with a risk adjusted return in our favor, right? So trade well out there, mind your risk, and let's get after it.